Good morning, folks. It is January 8th, 2018. It is about 10 minutes before 11 a.m. Eastern Time, or ICT time, as we would otherwise refer to it. Whatever time it is in New York, in the States, that's what time it is here locally with ICT. So, I sent out a couple tweets this morning, kind of get your gears turning a little bit, and relates to Bitcoin. And I want you to recall that I gave a video on my YouTube channel. It's in fact this video here. You can go to my YouTube channel, Inner Circle Trader, and the episode on January 4th, 2018. I go into the reasons why I felt that while everyone else was cheerleading and trying to pump up Ripple and such, it was not likely to happen. And I go through all the reasons why in this video, so I'm not going to bore you with all that. But it's not about retweeting things to have the same hope and prayer mentality. It's not about retweeting or pumping the storyline that you hope is going to unfold because you want to look smart online. You have to know what you're doing technically, and you have to also know what the drivers are going to be to shift sentiment. And I go over what that is in here, and I gave it to you the day that it occurred. And just go back and look at it, okay? Don't take other people's opinions about me or my content and then assume that's what it is. Investigate what I do, what I teach, what I say, and you'll see what I'm talking about is 90% club here, okay? We don't goof around, we don't pump, we don't cheerlead things up. We stick to the technicals, and with the tools in my repertoire have really served me well for 25 years plus. So I'm not a new kid on the block with this stuff. Okay, I didn't just recently find something I can see in the charts. I've been doing this for a long, long time. So let's go back over and take a look at the cryptos. All right, so we're looking at Bitcoin. I posed a question this morning on Twitter. Why was I mentioning 17,500 as a catalyst for anything bullish above that? Okay, is positive for me. It needs to get above 17.5. Why 17.5? Well, I want to go over a couple things before we get to that point, but let me zoom in and put some lipstick on this pig here. So we have, and I'm admittedly very clumsy with this, so it is what it is. All right, so we have this, and then we have this. Okay, and I'll talk about that. So we have the stops ran above previous high here, and we also have it over here as well. Now the stops are seen here. Let me find my little X here. This will work. So we'll put that here. And let's make a little copy of it and post it right over there. Now, if you go back and watch what I said on Twitter, and I gave reasons why I felt that we would not see 20,000 in 2017 on this particular day right here. Okay, and go back and look at it on Twitter. I can't manipulate all that stuff. And I told you the reasons why. Okay, and it was all of this cheerleading, pump it up, everybody's all excited about Bitcoin. And I said, if it's going to go higher, it's going to have to go down first to kill all the long holders, because you know what the mantra is in crypto, it's especially with Bitcoin, is hold on for dear life. And I think that's a little too myopic, because that's the same thing everyone had in their minds when the dot-com bubble was occurring. Okay, and I was screaming from the rooftops then, dump it, get rid of it, sell it, sell it, sell it. Well, just like anything else, if someone's doing well in something and someone's telling them to do the opposite of what they're doing and it's seeing profitability, who's going to win in an argument? Obviously, not the person that's speaking from a stance of objectivity. I don't have any skin in the race in this. So I can be on the sidelines and be very objective about it. And I don't have the emotions wrapped up in whether or not my money is going up and down and the fluctuations that occur. So again, I don't cheerlead anything. I don't cheerlead anything in the markets that I'm actually trading either. So to do those types of things, it's a hallmark of someone that's a novice, and you don't want to be doing anything like that in your own personal trading. If you find yourself gravitating to those types of personalities, all you're really doing is looking for something to agree with what your hopes and prayers are linked to. And if you're buying these types of things and you're holding on to them for dear life, hoping that they go up, and then we don't have any kind of meaningful retracements or potential reversals, you're just basically trading with blinders on. And just to say, well, it's worth the risk of seeing it climb exponentially and or lose everything. Again, that's a hallmark of a novice, okay, a neophyte. That's not what someone with a great deal of understanding would allow themselves to be subjected to. So looking at Bitcoin, okay, again, go back on Twitter, you'll see these are the days that we saw the actual thing I outlined come to fruition. And actually gave a storyline about on this day here that I was actually in a grocery store, and a gentleman a couple of carts behind me said that he was wanting to put his junk food back. He wanted to buy more Bitcoin. He wanted to save some money. So I'm thinking to myself, this is bad. And the morning of, my wife actually sat down with me and said, hey, look, do you trade Bitcoin? I said, that's it. The market's going to top right now. And I even made a joke about it on Twitter, but I meant it, absolutely meant it, because if everyone is actively talking about something being a good thing or shows an interest in it, like my wife, she's been with me for a long time. She has no idea what a chart's telling me or what it should be implied by looking at it. But she's telling me about Bitcoin and maybe I should look to buy it. Well, that's the top in the marketplace. So it really is that simple, folks. When the general population that is outside the scope of what we do, we're market technicians. We like to look at prices moving up and down, graphs and charts and all these types of things. People that are outside that circle, if they have an opinion about something, it's probably not a good idea for you to be in the same direction or position that would be explained by someone that's not doing this actively. So, and there's, again, this is one more evidence of the things that I talk about. I didn't create this. I didn't invent it. It's just common knowledge. When the Shoeshine Boy's telling you your stock tips and you own no stocks, it's time to sell. So in here, we had a run above this old high. So immediately I teach that your eye should go down to the left to the down close candle right before that new run. That's here, right in here. So we have a down close candle. So this down close candle right before this run above this previous high, this is an ICT bearish breaker. Okay, and what this does is it highlights a specific level that's 3 specific levels. It's not a zone. It's not an ambiguous guesstimation of where you should be looking for something. Okay, it's 3 specific levels. Okay, it's the highest high, the lowest low, and the middle. Okay, so I go into the mentorship and teach a little bit more refinement with that, but for public consumption, there's 3 specific levels you can use for the breaker, and it's just that simple. So how we use it is eventually price will go down below this down close candle, which it does on this particular day right there. When that happens, that sets the tone for the market to be in a potential reversal. Now, I know it flies in the face of everyone else that wants to buy these things and hold on, but you still have to pay attention to what the chart's telling you, because it's giving you an accurate depiction of what the mindset is of traders. So if they're losing this level here, and ultimately they end up losing this one as well with this run down here, this drop down puts me in an idea that, okay, we're probably not going to be going higher. And you hear me talk about that in the January 4th recording. In fact, there's another video where it's titled ICT on Bitcoin. I actually go into greater detail about I don't think it's going to go up. I think it's going to go down a little bit lower. I give you some specific things and why I think that. But from a short-term perspective, and here it is, we're right on the heels of the holidays around Christmas and New Year, being the 8th of January 2018. The market still has a lot of ironing out to do. So I allow these first couple weeks of the new year to trade, and I don't really hold hard and fast to an idea that pushes me into trading with live funds because I don't trust the technicals. But it doesn't change the fact that we still have to pay attention to them, and I want to be engaged in price action throughout this time period, even though I'm not actively in the marketplace taking on risk. So having these ideas in mind, I go through the process of tracking what price is doing. Is it showing me consistency around that theme of this being a breaker? Okay, so I'm going to come over here and draw this out as a box. Okay, and this is the part that people, when they first come in contact with me, okay, or they get ticked off and they want to find some kind of a way of a attack, they'll say ICT teaches supply and demand, and I'm going to show you today why that's nonsense. Okay, so here we have a range based on the high of this candle and the low of this candle. Okay, inside that range, there's three specific, well, price levels. It's the lowest low, the highest high, and in the middle point of that range, which I deem the mean threshold, or the middle, okay, or 50% if you want to call it that. If you draw it on a Fibonacci, put a fib level 50, drop a fib on the high to the low, and wherever that 50 level is, draw that out in time, okay? I'm going to spare you that because I want to keep the chart clean, but if you look at that range, just from a standpoint of the high and the low, what price levels are there? Well, you're just about the 16,000 level. Then you got 16.5, 17,000, 17.5, and just fell short of 18,000. So we don't really want to see price trade above this high, because if it's a breaker, it's going to hold price below this range if it ever trades back up to it. Now in here, we can see it trades up to this level in this range, starts to sell off again, and I shouldn't have moved that. Starts to sell off, okay, but it doesn't go below this low here. Price then rallies above here. When I was neutral, I was not bullish. I said that I didn't see any real accumulation in here. Price did sweep above this high, which would be resting buy stops on anyone that's short here. They come up, knock those individuals out, put that stop run here. But I said it would need to go above 17.5. Now, the reason why I said it would need to go above 17.5 for me to be bullish is because we would be so close to the 18,000 level. To trade to 18,000 would really dismiss this whole bearish breaker idea, and then we probably would be looking to go higher. And I still maintain that same consensus here, that if it trades back above 17,500, and what do I mean by that? Not just trade through it intraday and come back down. That's not what I'm talking about. It needs to trade above it, close, okay, on a daily basis. If we have a daily close above 17.5, then and only then would I be looking and considering any type of bullish scenario and waiting for it to run above to the 20,000 mark. But as it is right now, I don't see that, okay? So we've had a series of 2 days of distribution here on Bitcoin after running these stops. The next area of liquidity is basically below here, and then ultimately looking for another run that maybe would target this level down here. We have a swing low that was formed right there as well. So I want to drop into an hourly chart for Bitcoin. All right, so we're looking at a 1 hour chart on Bitcoin. And that shaded area, again, is that bearish daily breaker. Okay, so price is traded above that. This is the old high, and this is delineating the stop run here. Okay, and then we have what? Basically the same scenario unfolding, a breakdown in market structure, where it comes back up to that old high in here and sells off. Now, there's several optimal trade entries in here. There's one, here's another one, here's another one in here. And ultimately, what I asked everyone to follow on Twitter this morning is to identify where Bitcoin was going to be reaching for. Now, I know if you're watching my stuff the first time now, this is going to seem like all hindsight stuff. But again, go back and watch the videos and look at the tweets. I've already said all this stuff beforehand, okay? The idea that we look for distribution, right away, anyone that's been studying my material, if we're under distribution or if we're looking for selling, okay, what is going to be the mechanics behind that? It's going to be a sell model, okay, or an ICT market maker sell model. Your brain should be hardwired to look for consolidations right here, a run out of that consolidation, preferably a small little consolidation, and then one more time run up, and then an area distribution where the market breaks down. So we have smart money reversal in here. Low risk sell, another optimal trade entry sell here, sells off, and what's it reach for? Right below the consolidation. So we have an area in here. So this is the area of an original accumulation. Okay, and we have that in the form, I'm going to use that wick right there because that's the lowest point right there. So this is where all the original consolidation or accumulation for the market maker sell model to be really framed around. So they pumped it out of this consolidation up above an old high, ran all the stops, allowed folks that look at this stuff as continuation patterns and bull flags or whatever, and it breaks down. Very easy selling opportunity here. Small one from this high to this low, up in here, optimal trade entry, and an area of mitigation, and it sells off. And it reaches all the way down to the 14,000 level, which is conveniently enough right down to this bullish order block. Now these 1, 2, 3 down close candles, you have to blend all 3 of those candles together, or it would be otherwise a 3-hour candle, because each candle here represents 60 minutes or 1 hour. Since they're consecutive in nature, this is all fractal. Okay, price action is always fractal. That means what you see here is the same thing as it would be seen as a 3-hour basis or 1 3-hour candle. So because the market showed a willingness to run hard higher from that price point, leaving this down close series of 3 candles, you stop at the top of that candle here. This becomes a bullish ICT order block, okay, or an ICT bullish order block. They will act like magnets, okay? They'll draw price to them when it's coming down or going lower. Price goes right down to it, hits it beautifully, and we have a little bit of a pop in here. But the overall setup is done. From a short-term or day trader's perspective, using this model, it's over. That setup is done. Now, it can create another area of distribution somewhere in here, and it might be coming back up to this bearish order block here, and then sell off to wash out these equal lows, which is another area of consolidation, leaving the consolidation, coming back to the original consolidation, because this might be an area of reaccumulation from a much larger sell model. And I mean, that probably went over some of your heads if you're new, but the folks that have been with me for a while, they know exactly what I'm talking about. This could be the next level, the target below those equal lows, just like we saw this consolidation, and it runs up and goes down below it here. Anyone that went long, okay, and has that hold on for dear life mentality, their stop's going to be resting right below that. That's exactly where they went right here to tag those individuals out. They never saw a profit. They saw a paper profit where it was looking like it was going to, oh, okay, we're finally going to go to 20,000, and let's retweet. Everybody has that same opinion. Let's cheerlead it up, and ultimately the price is going to go where it's going to go, regardless of how many times you do a retweet or high five the next guy that believes it's going to go to 20,000 today. Okay, it goes right to where the liquidity is. So crypto is in no way different than what I've always taught about other asset classes. It's all about the orders. The orders are what makes or breaks profitability. The orders below old lows in the right context, when you're bearish, that's where price is going. Okay, when price is bullish, the orders that are resting above an old high, when the context is bullish, that's exactly where price is going to gravitate to. It's about those orders. It has nothing to do with your technical patterns. It has nothing to do with animal harmonics. It doesn't have anything to do with ladders or depth of market. It has none of those things because they're all gimmicks. All you need to know is the open, high, low, and close, and a certain phenomenon that takes place around a very generic, well, group of concepts that I teach. So it gives you a framework, and if you don't see the framework in price action, you don't do anything. So that gives you clarity. And how's that for logic? You know what you're looking for, and if it's not there, do you do anything? No. You turn the charts off and you go somewhere else, and you spend your time doing something, other than waiting for something that's probably not going to form. So we've seen a really nice market maker sell model here on Bitcoin on a 60-minute basis. Again, I did not have the participation on this run up, and I actually said this on Twitter that I was neutral on Bitcoin. I didn't see it as accumulation, and we can see why it was overall in an area of distribution. So This one's done. We're going to watch and see if we get runs below that 13,000 mark. If it does, it might accelerate on the downside and try to challenge that 12,000 level again. But for now, I wouldn't touch it. So let's go over to Ripple, which is another crypto that some of the guys are really cheerleading on Twitter, retweeting everybody that loves this one. Again, I will count you to go back and look at my tweets and look at the video, because I give you this level and I tell you it's going down here. Okay. Again, you can argue and wrestle with whether you like me as a person. I don't care. Okay. I teach the stuff that works. If you don't believe me, go through everything and try to dismiss everything that's been shown beforehand. Okay. I gave $3 mark, and then specifically $3.30 was a level I tweeted in chart form. And I said, as it hit $3, I would be out of any longs, 80% of whatever I would have long. And I don't trade these for disclosure's sake. I do not trade them. I don't even demo trade them. Okay. I'm actively studying them because I have a large body of audience that use this information I give out, that I teach by way of Forex and futures and other asset classes. They've been using it in crypto. So I have been really interested to see how much of an influence my concepts have had on other traders and students, and I can see why they're excited again. So I've said this many times, and I don't want to sound like a broken record, but it is very fascinating for me as an author for most of this stuff that you're all using. It's very, very interesting to see it. But I mentioned in tweet, you can go back and look at that. I would be out 80% of whatever longs I would have at that $3 mark. And then the next level was $3.30. Now, I did have some levels above here, okay? But if I give you a level, I'm implying that the way we practice, if it hits a level, you got to pay yourself. How much do you pay yourself? That's all going to be a unique and personal thing. Okay, I don't have a system that says I'm always going to take this much at this much of a move. It's whatever I feel at the time. And admittedly, this is one of the weakest things I have in my trading, is because I have not really been satisfied with coming up with a method that is black and white, where it's binary. It's this and it's that, or this or that. It just comes by experience. And I may never get to the point where I get like that, but I've encouraged my students to come up with a way where they can do that. And it may be something that I learn from. But that's the only avenue I think I have for new learning and trading. Everything else I learn is about myself. But from a price action standpoint, there's nothing new under the sun for me. There's nothing out there that is going to show me something new I haven't seen before. Okay. I have a lot of things I haven't taught other people, lots of things I haven't taught. But as far as me learning something new, that doesn't happen. I learn more about myself and my reactions or my expectations about something, more so than I learn about price action itself. So if I'm saying to myself and making it public knowledge that 80% I'd be out of my longs here, and it trades up to the next level, how much would be reasonable to come off at that point? Well, if you only have 20% of an original long position, what would you take off there? Half? That would leave you, 10% on? So you would have potentially 10% get stopped out at some point, but you profited 90% of your original position all the way through up to $3.30. When everyone else was tweeting, cheerleading on that it's going to go to $5, get ready to buy your Lamborghini, I'm telling everybody, look, there's no justification for that. And this is where it's at. It's done. We broke down. We have a bearish breaker in here, and you have to be mindful of that. And it's in video. Okay, it's time and date stamped. I can't change it. It's in the YouTube server, and it's in Twitter's, whatever you want to call it, their server. It's there. I can't manipulate it. So I said these things beforehand. I wasn't ambiguous about it. I didn't waffle about it. I said it wasn't going higher. Okay, and I gave you levels to watch for, new setups to form, to study it going lower. Okay, I mentioned this bearish order block in here. Okay, that would be one. And I said you want to watch around that $3 mark, because it's going to probably give you another opportunity for distribution. It did that very thing here, and we sold off, and we went down to $2.40, where everyone else was looking at this low here, saying it's going to go down there and it's going to start to pop. Okay, we're calling a bounce. It was a dead cat bounce. Okay, it bounced right up to a level I said it was going to be a sell, and it sold off right there. Went down to my level, $2.40, and then ultimately went consolidated. Okay, and then created another opportunity to do what? That's what I'm talking to you about today. I said in previous recordings that $2 was the level I would expect it to go for, which would be sweeping out this low. Why did I say that low? Because that's where the orders were. I told you that was where the orders were. That's exactly where the market's going to go. I give you interpretations from a market maker standpoint. I don't teach retail. I don't cherry pick from different mentors and people and try to create some kind of unique new thing. I'm telling you how an institutional mindset would interpret price action, and I bridge that gap with a chart, and I show you exactly where they're going to take it. And it happens every single week, every single month, every single day. I'm giving you example after example. Either I'm the luckiest son of a bitch on the planet, or there's something that I'm talking about that has validity. And again, the people that want to wrestle with this stuff, I want to shake them by the lapels. I'm like, dude, you just stop and just pay attention. Okay? Just pay attention to what I'm teaching you, because you're being stubborn and you want to have this team mentality because you like someone, or you probably paid for something for someone else, and you feel like a fool because you're doing that, and they're not doing what you're seeing here. And I'm doing my stuff for free right now. I'm showing you on a all risk of my saving face. Okay, I'm out here openly telling you what I think is going to happen. If I'm wrong, you'll see that I'm wrong. How many times is that occurring? It's not happening a lot. It's going to script because I understand how price is delivered. Period. That's the level of experience that is lacking in Twitter. There's a lot of people out there, I think, that are pretty decent individuals. They're very worthwhile in terms of following and listening to some of the things they're doing. And in fact, it's very interesting to see what they're doing. But there isn't a lot of experience in the sense that they know what they're doing. They're still experiencing new learning. I'm not doing those types of things. And yes, it sounds egotistical, but this is what experience sounds like. You know, when everyone else around you has less experience, it's hard not to sound egotistical, because how else would I draw a contrast to it? I'm superior because I've been doing it longer. That's the only thing. It's not because I wear a different style of clothing or drive a better car or live in a better home. It's because I've been doing it longer. That's all I'm trying to distinguish. Okay. So I would put more faith behind someone that has done something much longer than someone that has been right a few times recently. And you really can't substantiate what they've said based on what they actually do. Okay. So I'll just leave that for you to determine what you want to see value in. But I drew everyone's attention to this low back here in video. Okay. Look at it. You'll see it's there. It's in YouTube. It's on my YouTube channel. Okay, so I drew everyone's attention to that level right there. That's where the orders are. What orders? That's where everyone's protective sell stop is for the hold on for dear lifers. Now, anyone that bought down here, what did they make? Zip, because they just got knocked out down here. Right there, they get taken out. So they may be on Twitter preaching and hard and heavy, cheerleading, swinging their pom-poms, and retweeting everybody that's in love with Ripple. It's going to be the next thing. It's going to this, it's going to that. It might be, but it's still going to take you out of the moves before that all would take place. And that's what I'm trying to teach people to observe. You need to see those things. So what led to this move down to the level I called for beforehand, $2 mark? This run back to the $3 mark here, okay? This is the same thing as this move here. Price is fractal. Everything you see in one time frame or one scale is replicated in another, either in a larger capacity or a smaller capacity. That means if you see something that occurs in a 5-minute chart, if it has validity to it, the same thing can form on a 15-minute chart, a 1-hour chart, a 3-hour chart, a daily chart, a monthly chart, a yearly chart. It's all fractal. So when you understand the mechanics of what you're looking for, not bull flags, because there's really nothing valid about a bull flag, okay? When you look at the interpretation of an ICT breaker, there's something behind it than just simply saying it's a continuation pattern, which it's not. It's actually a reversal pattern. But the context behind a breaker pattern is this. You have to have an old high, and anytime price runs above the old high, if I'm already suspecting this is probably not going to continue, and why did I say, let me go back. I want to kind of like fill in this gap, and then I'll proceed on as to what led to this drop off over here. What I see in price, how did I know that $3 is a good idea to take 80% of any longs off there, and then 330 was there? Okay, 330 I'm not going to give you the context of what 330 was specifically, but in here, if you're in my mentorship, you'll end up seeing charts that show you why that was there. And I had not put them up there, so mentorship students don't freak out saying, "Oh, I don't see that chart." I'm going to give it to you because it's already hit my level, so I can go back today and give you all the details, and I'll dress it all up. But the fact is, I gave these levels and my interpretation of why it wasn't going higher beforehand. Okay, and I gave you the reasons why. I told you the scenarios that was going to happen. It was going to come down, trade up to $3, and then trade down to $2. That's what you got. It's right there. So what led to that idea that $3 and 330 was about it? Well, if you have volume, and I always usually take the volume off on my charts here, but if you have volume bars on here, you plot that on your chart. Let me see if I can pull mine up again. All right, so here we have the volume back on the chart, and I want you to take a look at how volume precedes price. Okay, when I share levels, obviously people have an issue with me because I'm doing way better than they are. They will challenge and say, I give you a myriad of levels, and then want to come back later on and say, I called this move, I called that move. No, actually, I only talk about the specific moves I mentioned, and that's what I'm doing here today. But I give specific levels because I want you as my student, especially mentorship students, because they have a greater understanding of what's going on. They know what to look for around these levels. What constitutes a setup? Just because I have a level in mind doesn't mean there is going to be a trade there. I have to still wait for something to form. But the levels are there beforehand, so my attention is focused at the time price is trading at it. So when price is trading at that $3 mark, I want you to take a look at what's happened. At this time, we've created a new high. To the left, we go right back to this price point right here. Okay, so this high, and now we have a new higher high. At that time, right here, this candle, we have a reference point of the volume in here. Now, there's going to be all kinds of spikes, and there's going to be variations of all that stuff, okay? But I want you to really use this tool, okay? Because I'm going to give you something here that has given me a great deal of X-ray vision, if you will, around key levels. I already know what levels should be key, but when I see volume supported, and you don't hear me talk about volume, okay? Only the folks that watch me do things with commodities ever see me do anything with volume. But volume precedes price. And what do I mean by that? We have a high back here, okay, a new high. So on this particular day, we have, and what is that? The 3rd of January. Okay, so in here, we get these crosshairs. On this high here, we have this volume bar right here. So this volume bar, and then we have a new high here. Okay, you see that? So we have this candle representing this volume, and then we have this new candle high, and we have slightly higher volume there. Now watch what happens when we create a new high. Over here, we have all this run up here, but now look what happens. The volume is way down here. That's way lower than that. Does that indicate new buying? No, absolutely not. What about the high up here? Look at that. Is that indicative of new buying? Volume should be doing something like this. Should be going higher. It's not. So look at the overall scheme of what's going on. We see price action going higher, making higher highs. Okay? But in the interpretation of volume, that should be seen with higher volume nodes. Is that happening? No. This is distribution. All of this running up is the longs selling out of their position, not new buying. So when you look back over on Twitter and you see all these hotshots that think they're smart, they're all going to retire. They're not looking at things like this because they don't know what they're doing. They have no idea what they're doing. They're following along with the herd mentality, cheerleading it on, hold on for dear life. We're all going to laugh at everybody else later on. Who's laughing now? That's my question of the day. Who's laughing now? Because I'm telling you things that make sense because they exist not only just because I see them today, but they've always been there. Market makers have levels in which they want to allow assets to trade to. not for your benefit, but for the benefit of them or clients that are in business with them, banks, large institutions. So when we trade around key levels, what makes it a key level? There's several things that I teach around that, but it's not support and resistance because these levels were not even here. When I gave $3 and $3.30, that has never been traded to by Ripple. But I gave you that specific level, and it was only off by a penny and a half. I was off a half a penny. That's tight for an asset class I don't even trade. I said that it wasn't going to go higher. We have an ICT bearish breaker in here. Price trades up into that breaker where we have this down close candle. We have a bearish breaker in here. So this new high that broke above, let me get this crosshairs out. It's a little bit hard to see that. So we have this high here. We have a new high here trading right to the level I called for, $3.30. When only 80% of the position would still be on at that time. Why? Because volume was giving me the indication that we're close to an area of distribution. Okay, and then we see the technical support with a breakdown in market structure, and then we trade back to the breaker here, and have one more deeper retracement. I said, watch that $3 mark. Why? Because it's going to be a level of value. They want to get out of their long position around $3. They're not going to take their long positions off down here. They're going to drive it up and wait for it to hit $3, and then they can get out of what they couldn't get out here on the first time. It sold here. They started selling and distributing their profits here. They rallied up. They sold some more. Came back down up to here. They sold some more here. They left that level of value, and then right back to $3 again. They sold it, and then look what happens. The majority of the selling takes place. What's going on there? Any residual longs that were riding all the way up here, they sold out and added new shorts. Now, new selling came in. Well, how can you see that? What's the interpretation behind that? Well, let's go back to volume. All right, so now we have that same premise, but now we're going to switch our perspective, okay? Now what we're going to do is we're going to measure, again, anything that we're seeing going up. We're not looking for that to be seen as buying. Otherwise, we would see volume increasing as we see this high here. It's been breached with this high here. So between these two reference points, there should be a higher volume node. Let's go back over here. Crosshairs. We're going to put it on this swing high here. So we have this nodule right here for volume, okay, and then we're going to look at this high here. So from this candle and this node on the volume and this one. So we had a higher volume here on this high, and then we had this higher high form with a lower volume node. So it's not new buying that's going back up to that breaker. It's just being repriced. That's all that is. So when that occurs, we know that this is going to be a selling point, which I already gave you before volume even showed it and before price ever traded there. Wow, it just hit you, didn't it? I can see shit before it happens, folks. Whether you like it or not, learn to love it because it's consistent. This is distribution at ICT bearish breaker. Now, how can you measure that? From this high, as price is dropping, then and only then should volume start to go higher. Each time it starts to move lower, we should see higher volume nodes. From this candle here, price is dropping. We took out these lows here. It should be done on high volume. These levels here, here's volume, and then we have price trading through it on this candle right there. We got it. Price is driving higher. All the volume, we went from low volume to high volume, and bang, large volume node, largest one. Now, this is not stopping volume as VSA would teach. Now, they'll teach you stuff like that, okay, but that's not what that is. It's not stopping shit. All it's doing is giving you an indication that it's going to go lower again. Where's it going to go? The level I called for where this liquidity is, right below this low. So yes, we went back up and we consolidated, but what did we do? What were we actually doing in here? Let's go back. Okay, so let's go over here, and now we'll get the crosshairs off. We have this low here, and we went back up into a range. What range are we looking at? We have another breaker. This big down close candle is the ICT bearish breaker for this run on this swing high. So this run on the stops, our eyes go right to here. Okay, so now we're going to do that same thing we did earlier, drawing a box, which looks like to everyone else supply and demand, but it's not supply and demand. This is technicals from an institutional perspective, reading the market from how liquidity is seen. Okay, I'm trying to be very careful how I say these things because I don't want to divulge any mentorship stuff. But we have a bearish ICT breaker. Price trades up into it. Sell. Sell. Look where it stops. It's stopping at the top of that candle. Okay, and then boom, it hits what level? The 20 or 2.8 level. Okay, so we have that 80 phenomenon taking place, which I like. Hits it, and then we leave it. Come back up. Mitigation. Sells off. Where's it go to? $2 mark. Everything I said was going to happen, and look what it does. It goes there. Where's all this volume? Where's this volume coming from? That's everybody stops resting right below there. That was not just knocked out. Folks, this was told to you before it happened. It was told to you in nauseum in terms of detail why it was going to happen. It's there. So listen to the bullshit if you want. You know, the guy never gives any trades in advance. He never talks about things before it happens, yada, yada, yada. The shit I'm talking about happens to script. Okay, I don't see anybody else doing this stuff. Okay, I can tell you what the market's going to do, not just in the next move, but what it's going to do as a scenario. What's going to take the stops out? What's going to draw new liquidity in, put people on the wrong side? Come on, how many times do you have to see this stuff before you dismiss any other outside influence? Seriously, I'm here. It didn't cost you anything but the time to listen, but it's exactly what I said was going to happen. Too many of you are so hopped up on the hot hand right now. And I'm telling you, I don't have a hot hand. I have a steady hand. Okay, I don't want to be hot once in a while. I want to be steady Eddie. I want to be the guy that knows what's going to happen, most likely, and I only want to execute then. And that's what we see here over and over and over again in an asset class that I don't even trade with live money with. This is stuff that I'm just studying, just like everyone else is. Okay, but I'm not out here cheerleading and saying Ripple's going to the moon. Ripple's going to $5. I'm going to cash out everything. That's not what I'm doing, folks. I'm telling you what's going on behind the scenes, why it's going to happen, and it's there. It's not a guess. It's not gambling. There's the science behind what I said and why it took place. Go back and look at it. It's there. It's documented. I didn't have 15 different things that could happen. I can go back later on. I gave very specific scenarios, exactly why it should take place, and it happened. And it does this all the time. Every single week, this is what happens on a Forex setup where we know certain parameters are there, certain things are going to take place, and we stalk that. All I did was give you what I would have done if this was a Forex pair. And that's how it works. So speaking of Forex, let's go over to Forex. I'm going to talk about something I did on non-farm payroll. All right, so here's that demo account. Again, always, every time I show this, make sure you keep track of that number up there because that number is not going to change. Okay, I'm going to show you accountability. The thing that's lacking, I'm not using half a dozen demo accounts. I'm going to use one so that we can see what we can do with just one and using proper risk management and money management approaches. So let's go over. I'm going to show you a video I did last Friday. Now look at the time. Okay, this is recorded and made beforehand, but it didn't trade to the level I called for in the video, but it did today. All right, so you can see the time and the date when this was made. This is all New York time, okay? The reason why I didn't post it, because I wanted to see if we would get down to it today. It doesn't make a difference, and you'll see why it wasn't really shared, because the part about the euro-dollar was already shared on social media through Twitter. But I want to show you what was not seen from the cable standpoint and what we ended up seeing as a later result. So I'm going to go to this video here, and I'll just play it. Again, I have to show the disclaimers, folks. I apologize for that, but it is what it is. The market looks like it may want to drive under this level. Now notice that I'm doing this on Friday. And this is how I practice non-farm payroll. So you got I'm sorry. I think the drone is going to be as well. Now watch how price starts to run higher. So I'm going to frame two potential scenarios for you here. Either one would have been fine, but it's non-farm payroll, so it's practice only. So I'm measuring the pip spread between entry. So 30 pips above, that would be, there you go. This is the one we shared on public, on Twitter. And you want to look at Twitter. I shared that chart as well. That's what we're seeing here. So I'm going to outline a short. So there's two scenarios or setups here. One was the bearish order block with a stop at 35.99, and now I'm going to show you turtle soup, which is the run above the initial high of the day, which is the characteristic of non-farm payroll. Run the stops. So I have to wait for price to get back above that initial high, trading preferably above 35.80. Again, notice the time down in the lower right-hand corner when this is occurring. It's just a few minutes shortly after non-farm payroll numbers have been released. actually pulled data that is making it public and use those numbers as a smokescreen to run out liquidity. I'm referring to the employment numbers there. Now, admittedly, as you'll hear, I thought that we could get that 35.20 level last Friday, but you'll see how I managed that. It didn't happen that day, but we did get it eventually today, as on Monday, the 8th of January. So now we're above that initial high of the day, so watch what I start outlining in here. We're trading around the institutional 35.80 level. So I'll map out my perspective on what I think might be seen in price as a result of this. Again, price is above the initial high of the day. It's unwillingness to go above 35.80 of any significance, which tells me that we might maybe punch a little bit higher, but it's going to be limited in scope, so it isn't going to be like a run to 36 big figure. So I want to be selling above that initial high of the day and know that I'll be really close to the high, like right about now. So they had a high initially on the day, perhaps midnight, New York time. 35.80 institutional level 80 levels. And go around. There's some level. On the other side, 35.80 level, which also effectively takes out the buy stuff on any others that were short. Notice that the idea is that anyone that has been profitable short. That's where the stop is for the bearish order block. Now I'm going to give you a setup for turtle soup. Okay, 8:36, Friday, January 5th. Now, if it were a non-event, like it was non-firm payroll, not included in today's calendar, I would be short right now. Okay. So I would be short where we're at. Yeah. Now watch how much price moves against this idea or outline. I'm not wasting my time. The high on that candle is 35.82. So again, high 35.82 right now. And that's how you do accountability, folks. It's nothing to be afraid of and nothing to be fearful of, unless you're losing. And people don't want to see that. But typically, on the sidelines, until the third Tuesday, so as I wait for the first 2 weeks to trade for, I'm every year in zero, and then I pick up my actual interest, financial entries and such on the third Tuesday of every January. And then I go light. I go very, very light on leverage. And I just go very, very slow. I go very, slow with the amount of leverage. It's okay to February. And once again, in February, I start working towards a normalized amount of leverage. And by the 5th of February, I think it's just remember is initial hearing costs. The thing is, as we go higher, cable, the price will be higher. But the premium level, the price that it's second going into lower. And now, the stocks down at the initial high, right? And I will be the first time to start. Because it's fine, we could see another lackluster and it's not. We can just go back to the pay attention to this. Yes, that's how okay. So you go over from here. So you can consolidate between 35 and 35, 15 because that's not safe. So with that said, I would like to take profits at that level at the equilibrium price point, as you'll see later on as I make reference to that. Now eventually I would be speeding this recording up, as you'll see. But the stop that you used for the bearish order block will be the same with the turtle soup here, 35.99. Very, very tight stops. Sure. Buy stops. Yes. And I would use stops because we know since taking out buy stops above that line, and this comes above my entry. And so you're above the line, whatever goes down here. For someone that wants to know what to mention, the theme of this particular event is take the stock. Most of the marketplace is everyone finds. But I view Hero as a upsetting the ones that are going to stay in the picture eventually. Post. Okay, we're coming up close to the time where I'll start recording this at a higher rate of speed. So that way you guys know that what I'm doing is not any audio. I'm not talking right now. Okay, so that's not talking. It's going to be cool. Press action now. Like when I take this off, then it'll be real time assessments. But I think I'll play to it. All right, it should be going a little bit faster now. So while I said at the time when I was recording on Friday, or not, it hasn't started yet. It should in a minute or two. I'm actually going to dub over that now with commentary that would otherwise not be there because it's not being recorded. It's being sped up. Like now we're going like 5,000 times the regular speed. Okay, so at the time I gave that entry at that red level, okay, trading around that 35.80 level, institutional level, I want you to see how much of a heat is put on this position. Okay, and also watch how many times we get a reaction off of that bearish order block, which is the lower level line right in here. Okay, so just watch that. So we have a run down, and I'm going to come in and give commentary about taking profits there because I mentioned the idea of equilibrium. It could be a consolidation day because it's Friday. It's non-farm payroll. We ran out to buy stops, so it may ultimately reach for that low, but it may not do it Friday. So I want to come back in and give insights in why I'm taking profits. Okay, so I'll be taking my stop. No, this is a paper trade. It's not live. Again, this is all practice. This is what I do with non-farm payroll Fridays. And that would be it. 30 pips would be pocketed as a experience. Which is also another reason why I would like to take profits there. To it before 10 a.m. Now, pay attention to that part I just said. So what I just basically mentioned was because the probabilities are so high that we'll go consolidated or sideways, I may not see that 35.20 level hit. So that's why I want to take the bulk of 75% to 80% of the short position off that I've outlined here. It's a paper trade. It's beneficial to take a big, large portion off at equilibrium of the daily range because it may not go outside of the range that's already defined at this time. So having that mindset, okay, the market makers may keep it so narrow once they run the stops to hold over into the new week. And I may be entirely wrong. It could go screaming above 136 big figure, which would stop me out anyway, or eventually trade down below that 135.20 level to knock out those stops. And ultimately what you'll end up seeing is the market comes back up to that bearish order block and does eventually trade a little bit higher, which would have either stopped me out or, as you'll see in the video, it comes to 11 o'clock in the morning New York time, which is the London close kill zone, where if I'm in a trade, I want to be collapsing any open positions as a day trade and move to the sidelines. So just watch that in the lower right-hand corner. We're at 10:30 a.m. at the time on Friday of last week, non-farm payroll. And you can see the market's really showing no willingness to want to go lower, having all characteristics lending well to consolidation, or it could just gravitate towards my stop. So I'm watching. It's a couple minutes before 11 o'clock in the morning. Again, I would be at a position where 80%, 75 to 80% of my position would have been banked. But because it's a paper trade, I'm only outlining it in that sense. But here we are. We're getting ready to give the commentary about taking the position off. So there you go. That would have been another 18 pips there. So the balance with 20 to 25% remaining would have seen about 18 pips gain, and the first 80 to 75% saw 30 pips. And ultimately, you can see, with time, it goes back up to a point at which eventually either would have stopped me or shown me no profitability. So that's why I use kill zones. ICT kill zones, they're time references. They're not kill zones in areas on price. Again, you can see that the hallmark is that the market really didn't do much at all. It just consolidated, went sideways. Now, I want to take you back over to Forex because I want to show you what transpired as a result of that euro dollar we outlined. Here's that run above the equal highs, the old daily high. It runs for the liquidity, not the daily high. Hits it, sells off. Now, what did I just outline in the beginning of this video with the cryptocurrencies? Bearish ICT breakers. Isn't that what's actually occurring here? It's breaking the short holders with their protective stops right above this retail Candyland. Equal highs. They are so telling in the marketplace. It's so obvious. You can't hide it. So what we do is just run above those equal highs. Our eye goes right to the down close candles. What is that? Right in here. Let's zoom in. Tell you, I wish I was this fluid with TradingView. I feel like a noob. All right, right there. So here we have the down close candles right before the run up. So this is an ICT bearish breaker. And how we use that is we wait for price to trade down below it, which it does right here on this candle. Wait for it to trade back up to it and start watching to see if there's distribution. When price comes right back up to the bottom of it, hits it, starts to sell off a little bit, but the overall context has not changed. Where is the market most likely going to reach for? Well, what do you see on the left hand of this chart? The opposite of this, right over here. Okay, and that's the 120 level. Now, it could go to that level, but right above 120 would be what? 120.20. So the institutional level I would be aiming for would be 120.20, which is right in here, which is what I was aiming for at the non-farm payroll. You hear that in the video, and right there I tweeted the chart. As it happened, as it slammed right into 2020, as I always do, like a sniper, I'm hitting it as I see the levels I call for. When it hits it, I'm screen capturing it at the very moment it does it and immediately tweeting it. I'm not doing it 5 hours later. I'm not doing it 60 minutes later where it can be doctored up. Everything is done at the moment where no time can be used to manipulate, Photoshop, or none of those things. Okay, everything is exactly as it happens when it happens. Once it hits that 120.20 level, we get to run back up into the bearish breaker here. And then we have the weekend. We have Sunday's opening, and we have a gap. So it comes back up, fills in the gap, runs the buy stops that would be on any short holders. Hello? If they're short, where's their stop going to be? Right here. That's what you see right here. Bang. It hits it inside the breaker. What's it doing? It's going to sell off. Whoop. There you go. And ultimately, there's where we're at. So it runs all of these equal lows down here, and it even runs the liquidity resting right below this low as well. Okay, so again, I said that if you see non-farm payroll Friday, it runs an area like this. What it does is it many times acts like a Judas swing for the month. It'll give you the initial run here and give you a nice little price swing to go the other direction. And here you go. You got an opportunity to see approximately 100 pips or so. So a little bit more than 100 pips, all outlined before the fact. So you've seen it. Now try to dismiss it. Hopefully you found this video insightful, entertaining, or at very least enough to piss you off. And until next time, I wish you good luck and good